Well, greetings and salutations, Series 24 test takers. This is Dean Tenney coming to you from my studio here in fabulous Las Vegas. I've been putting this off for a long time because 160 question explicated practice final is going to be a while. I'll set my timer for 30 minutes. The idea here is you hit pause, you answer, you hit play, and see how you did. The best free supplement to your paid study materials is my YouTube channel. But if you would like a Kaplan QBank, I think it's a great investment as a paid supplement. The Kaplan 24 QBank is the best. It's easy to manipulate and do performance tracking, things like that. You can get 10% off on that with my Guru 10 discount code at checkout. I think that brings it in for like a little over $100. For that commercial, Kaplan allows me to give you a free look on Kaplan content. So let's get started explicating this exam. If a market maker's bid or offer is decremented to zero and the firm is not using automatic quote refresh, the firm must update its quote and size within how many seconds? That is 30 seconds. The test is a happy or barbell, I would say, between memory work like this, recognition, and then judgment questions. Question 2. During the onboarding process of a new personal securities account for a 69-year-old investor, so that's over 65, and we're worried about seniors being exploited. We have to have something in our WSPs about how we're going to protect seniors. The registered rep attempts to obtain the name of a trusted contact person who will be notified if the firm suspects exploitation. However, the investor looking to open the account declines to provide a contact name and information for trusted adult. What is the best course of action? Open the account and inform the investor disbursements from the account must be made. On the extended disbursement form, no. B, note the refusal to provide a trusted contact person open the account. Yeah, it's not mandatory. We ask politely, and if the customer doesn't want to do it, then they don't have to do it. Question 3. When determining whether a registered rep or representative is churning account, each of the following is taken into consideration except. The Supreme Court said they don't have a definition about pornography, and it's kind of like the definition of churning. It's trades that are excessive in size and frequency. We just know it when we see it, as they said about the definition of pornography. The size of the positions traded, certainly. The rating of the securities, whether it's junk bonds or high, investment grade bonds, I don't think that has anything to do with it. Motive of the representative, yes. I mean, the whole point here is to generate commissions. And frequency, given that answer set, I would use the Sesame Street trick and say B is on like the others. All right. Question 4. Ed sells 1,000 shares of EFG held in street name on Friday, August 15th. EFG has declared a cash dividend of 85 cents to be paid to shareholders as of record August 18th. So he did buy the stock before the X date, right? So that means he's entitled to that dividend. It's payable August 25th. Who cares? After receiving his account statement on September 10th, Ed calls to complain that his account was not credited with the dividend. In this case, he should be credited the $850 dividend. Yeah, I mean, it's his money. 85 cents on 1,000 shares is $850. We tell him to write a letter? No. He was not entitled to dividend? No, he was. As long as you get to buy the stock before the X date, you're entitled to that. Hopefully, we don't have to go to arbitration. It's A. Usually on trades just prior to the X date like this, we have what's called a due bill, an IOU to the buyer. Saying you were supposed to, by the way, usually it's the other way around on the test. What I'm saying is that the person who bought it doesn't get the dividend. Anyways, I would know that a due bill is on trades just prior to the X date. Anyways, it's pretty straightforward. Maybe they're trying to trick us into thinking it has something to do with the buyer and not the seller. Question 5. Trace provides reporting information on all the following except. Municipal bonds. No, municipal bonds, remember the thing for municipal bonds is not trace. Municipal bonds have their own thing. Yeah, it's for debt, right? Investment grade corporate bonds, foreign private issuers, non-investment grade. Indeed, indeed. Muni bonds are typically done through IMA. So A. I keep forgetting to hit the next button. Question 6. A registered representative is aware of material non-public information on an issue, but does not trade on it. He does, however, reveal it to one of his customers who does the trade based on this information, who is liable under the insider trading rules. Give me a bunch of these. 1, 2, and 3, right? The customer, the rep, and the firm. Everybody's in trouble. So, that's not a bad draw on a Series 24. Get questions like that. Question 7. Under FINRA rules, the prevailing market price for markups on corporate bonds, given that they're going to be using anything other than, the current thing. Now, what we're talking about is what you paid for them, right? So, prevailing market price, so it's going to be contemporaneous cost, right? Question 8. Which of the following best describes a firm quote? So a firm quote, remember, is all quotes are considered firm, at least 100 shares. But if I'm displaying size, I have to honor size. If I fail to honor that size, very testable. That's called backing away. And you would turn me into the Department of Enforcement of FINRA under the Code of Procedure. So it's willing to execute up to the size quoted. That's A. Not the minimum size, right? Whatever size I'm quoting. My minimum size to quote is 100. But if I'm quoting 8 by 8, that's 8 round lots on either side, then I'd have to honor that as well. Question 9. If not appealed to the National Judiciary Council, so be careful when you're being asked. You can't appeal, arbitration. This isn't arbitration. You can appeal Department of Enforcement findings to the National Judiciary Council, and you can appeal that to court, to the SEC, and then ultimately to court. So other than banning, barring, or expulsion become effective, they become effective no earlier than 30 days from the date of the decision, right? So question 10. Purchase and sales, sometimes we refer to this as the blotters. Purchase and sales of securities must be posted to the, there we go, broker-dealer's blotter no later than the business day following the trade date. We want to make sure the stuff is being done in a timely fashion. Question 11. Which of the following statements are true regarding PIPE transactions? That's private investment in public entities. So what you're getting there is unregistered stock in a public entity, public company. Accredited investors purchase restricted shares in a privately held company. Well, that means you don't know that the other P is a publicly held company, right? That's what the P, the second P is, private investment public entity. So it's not 1. 2, accredited investors purchase restricted shares in a publicly traded company. That is indeed true. 2 is true. The shares are immediately registered with the SEC by the issuer. Well, yeah, I mean, the game here is I'm buying them unregistered at a discount, then they're going to be immediately registered, and hopefully they'll be a higher price. The shares purchased are registered with the SEC after 6-month holding period. No, it's 2 and 3. 2 and 3. Question 12. A customer places an order to buy 1,000 shares of EFGD from a firm. The firm does not make a market in EVGD, so I'm not a market maker. So it purchases the stock from the market maker at the inside market and then sells the stock to the customer with a markup. So I didn't buy this for the customer and charge a commission. I bought it from the market maker and then charged the customer markup. So this is an example. I like this one. right? This is not an agency transaction. If it was an agency transaction, I would have bought it from the market maker on behalf of the customer and charged a commission. A riskless and simultaneous trade that's exempt. No, I mean, you're actually going to be harder pressed to be charging a lot of money for a trade in which you had no risk, right? I had no risk here. So, I mean, that's not true. C, a riskless and simultaneous transaction, and the markup must be disclosed. Yeah, so, I say something like, hey, Mr. Jones, I bought 1,000 shares from the market maker. I marked it up a penny, put a penny in there, and then charged you a markup of a penny. And I don't have to have a good reason, but it helps, or I should have a reason. I say, yeah, a penny markup is less than my commission would have been. I don't have to have that rationale, but it's certainly riskless and simultaneous, and I need to disclose the markup, certainly. Question 13. Which of the following statements is the most accurate with regard to pipes? So another question about a private investment in a public entity. The securities are restricted. Exactly right. That's why it's called a private investment, and then the issuer will register them. So it's A. The securities are restricted. Question 14. One of your representatives bought a substantial amount of a penny stock for his personal account and now appears to be recommending the stock to high net worth customers. Well, it doesn't take many trades to pump a penny stock, right? It sounds like a classic to me, pump and dump, perhaps. In discussion with sales supervisors of various branches, you learn that several representatives are doing the same thing on the same stock. It sounds like the pump is up, the pump is going on. What could be a likely supervisory concern? The representatives might be preparing to mark the close. No. The representative might be attempting to manipulate the market. Yeah, this is called a pump and dump. They haven't done the dump yet, but it looks like the pump may be underway. So the answer is B. B. Question 15. A market maker in a global market stock is quoting 23.15, 23.17, 10 by 10. I'll link to my lecture on this. I'm trying to bring this in a timely fashion, and it's already going to be, pretty long explication. These practice exams are. My channel does long form content, so what can I tell you? But anyways, briefly, I'm willing to buy 10 round lots, 1,000 shares into my inventory at 23.15, and I'm willing to sell 1,000 shares out of my inventory at 23.17. A customer enters a buy of 400 shares at 23.15. This is called limit order protection. It's my job to know that's a limit order. The customer specifies the price. That means, it's a limit order. And what I need to check here is usually with a market order, the customer would be on the same opposite side as me. But if the customer's price on his limit is the same or better than mine, then I have an obligation to display. So this customer wants to buy 400 shares at 23.15. I want to buy 1,000 shares at 23.15. So I need to update my display to 1,400 shares are now available at 23.15. So, I'm willing to buy, he wants to buy, it's on the same side. That is testable. As I said, I have a whole lecture on it. And I tell you to make an exhibit. I'm not going to slow down and make an exhibit here. I'll just refer you to the limit order protection lecture or the trading and market making lecture that's on the channel. Whoop. Question 16. Question 16. Under the uniform practice rules, the X date for a regular cash dividend is 1 day before the record date. Anything the reps and customers get confused about is fair game as a supervisor. So the X date is the first date on which the stock no longer trades with dividend attached, and it's 1 business day prior to record. Question 17. For trades executed during normal hours and before the close, the report of a cancellation must be made within how many seconds of the time the trade is canceled? That's 10 seconds. Hopefully, as you're watching this, you keep some 4x6 cards or a notepad where you can make notes of these recognition style test questions like this. All right, question 18. Which of the following principles is not permitted to approve advertising for municipal fund securities? You should definitely know when you pass the test, you can. And 51s and 53s are municipal, registrations. It's the 26. 26s can only supervise mutual fund stuff. I feel like starting every 6 and 26 class by why don't you get a 7 and a 24, because you're going to need that eventually. Question 19. Form 3, attesting the ownership of common stock of an issuer must be filed with the SEC within how many days of becoming an officer director? Once you become a control person, you have to file within 10 days, right? So A. Question 20. Shares of common stock in a non-reporting company. That's key to answering this question. So a non-reporting company means it's not filing 10Qs, 3 10Qs, and a 10K, the annual report, with the SEC. That's what reporting means. You are doing that. So non-reporting is important. Sold to a UK under Reg S. Reg S is a domestic issuer, US issuer selling offshore. A distribution compliance, it's 12 months. Now, if this had been a reporting company, it would be 6 months. So, RTFQ, make sure you read the full question, right? So the reason this is not 6 is because it says non-reporting company. Question 21. A bulletin board market maker is quoting 17,1705. Under FIN rules, the market maker must be willing to buy or sell how many shares of the quoted price. The minimum quote is 100. So, you don't get many aim and shoot point and click questions like that on your exam. So now remember, if I'm displaying size or I choose to participate in providing additional liquidity, that might be different, but don't bringing extra stuff into questions. Question 22. Mutual fund shares are never marginable. Reg T, remember, is part of 34, and it says the Federal Reserve Board is in charge of saying what is marginable and what's not. And new issues are not marginable. And it's considered a new issue 30 days from the effective date. So open-end funds are continually offering new shares, so it's a new share. So it's not never marginable because remember I just said it's not considered a new issue after 30 days. So if you've held it fully paid for 30 days, then you can use it as collateral. So the answer is B. Question 23. A representative somewhat encouraged a customer to purchase mutual funds an amount just under the next dollar volume bracket, which entitles the customer to a reduction in sales charge or remain silent on the matter. This is called, given that answer set, all those things are bad. I mean, B might not be bad, but it could be. It sounds like a breakpoint sale situation, certainly A. Question 24. Under the Code of Arbitration, a respondent must answer within how many days after receiving a statement of claim? That would be 45 days. 45 days. Question 25. According to FINRA's corporate financing department, stock acquired as compensation will not be considered unreasonable if the amount does not exceed what percentage of the total offering? That is 10%. 10%. Question 26. Clearing firms are required to notify their correspondent introducing firms of accession reports they have available by what date each year? Now, remember what you're supposed to be doing is hitting pause, answer, hit play, and then see if you got it right. And then hopefully you're taking notes on these aim and shoot point click questions. Just kind of make sure you get all the aim and shoot point and click questions you're entitled to. Question 27. Which of the following must be reported to Oates? Oates has gone bye-bye. but its replacement does these same things. So, it's to track orders to make sure there's no shenanigans going on, right? So it's 1, 2, 3, and 4, to make sure we're not, making up some artificial timeline of some sort. And again, I wouldn't worry about that, except knowing we have responsibility to track the order of these systems from acceptance to execution, right? So question 28. A representative borrows $10,000 from his mother-in-law, who is also a customer. He signs an agreement to pay back the loan over 5 years at market interest. This arrangement is acceptable because they're an immediate family member. So the answer is A. Question 29. Registered rep who learns of a customer's death should cancel open orders. I think you can actually get that right with what I call reduction to the ridiculous. What does the word look like if that is not the correct answer, right? Question 30. The FINRA rule dealing with members' responsibility regarding deferred variable annuities applies under which of the following circumstances? The initial purchase of a deferred variable annuity? Absolutely. 2, subsequent additions? No. I mean, every time they want to add to this thing, that's not relevant to the supervisory challenge. The initial sub-account allocations, I think of a deferred variable annuity or variable annuity as a mutual fund with an insurance wrapper, and the separate or sub-accounts are mutual funds. So certainly would be interest there in terms of our responsibility about suitability. So far 1 and 3. 4, sub-account reallocations. No, once you're underway, you want to reallocate. That's completely, something that, we're not going to have a responsibility to do. So it's 1 and 3. Question 31. A market maker quoting WXYZ at 53.45, 53.50 is holding an undisplayed customer order to sell 100 shares at 53.48. So to avoid a manning obligation for an accepted order, the market maker could offer the stock. So in other words, what I'm going to do here is I'm going to step ahead of that limit order. I'm going to say, well, I'm going to change my quote, say I'm willing to buy it at something better than the customer, or excuse me, sell it, right? I'm on the ask side here. So usually the customer is on the opposite side. But remember, he wants to sell at 53.48. I want to sell at 53.50 as a market maker. His price is better than mine presently. And then I update my display to 53.47. And whoever this customer is says, are you stepping ahead of me? I say, I certainly am, but I'm willing now to sell at a penny less than you are. And that benefits people by narrowing the spread. Question 32. On the basis of a 20% decline in the S&P 500 index, trading is halted in all markets for the remainder of the trading day. Under New York Stock Exchange rules, the market on close orders pending at the time, well, there isn't going to be a close, right? Because we've halted trading, so they must be canceled. Question 33. A Series 57, I hate that we call these, it drives me nuts when people call this a license. It's a registration, but just my own pet peeve. Anyways, a Series 57 registration is required for persons who supervise NASDAQ market makers and proprietary OTC traders. Yes, all of these. Kind of funky that's, before I actually read the rest. NASDAQ market makers, yes. Proprietary OTC traders, yes. All of those. Question 34. Rules recording those analysts who circulate research reports for broker-dealers include all the following except. So, a statement by the analyst certifying the source, amount, and purpose of compensation if the analyst's compensation is related to the specific recommendation. Indeed, Remember, I'm looking for the except. A statement by the analyst certifying that no part of his compensation is related to the specific recommendation. Indeed, that's true. C, a statement by the analyst certifying that the views expressed reflect the analyst's personal value. Indeed. So it looks like it's going to be D. Let's see what D says. A statement by the analyst certifying he has not and never will, oh my goodness, accept compensation for specific regulation views contained in a research report. No, I mean, he's going to be compensated. The disclosures need to be made. So it's an accept format question. So D. Question 35. Portfolio margining allows an investor to assume a greater leverage. They also get a little more time to come up with maintenance calls. So A, assume greater leverage. Question 36. A passive market maker cannot bid for or purchase a covered security at a price exceeding. Now, what we don't want to give is the false impression that this is actually hot. And so we're not going to have to, at a price exceeding the highest independent bid at the time of the transaction. So, that's what we're concerned about, making it look like instead of it's sticky, that it's actually, hot. Question 37. It looks like I didn't quite fit this one on the screen. I'm trying to make this as large as possible, realizing that some of you are watching this on your phone or wherever you're watching it. So it looks like I need to step down a little bit on my size. A registered sales assistant was assigned by the member firm to verify and guarantee the signatures on behalf of 3 registered reps. A customer of one of the representatives sends an email seeking to wire transfer of funds to a third party in Singapore. The email contained a sign wire transfer form, which the representative forwarded to the assistant. Which is the most likely next step? Approval for the wire transfer of funds outside the U.S. must be obtained from the AML official of the firm. No, the larger firm they couldn't do it. I call that test-taking trick reduction of the ridiculous. And what would the world look like if that were true? The third-party wire must be verified and guaranteed by either general securities or financial operations principal. No. The assistant will witness the customer fixing his signature and examine the customer's government-issued ID. Yeah, that sounds like the most reasonable thing given the circumstances. C. Question 38. EFG Corporation announces a 3-for-2 split to the holders of record Monday, July 15th. So remember that if it's a cash dividend, the X date is 1 business day prior to record. But if it's a stock split, the X date is the day following the payable date, right? So it's payable July 30th. That's what we need because it is a stock split. So when is the first date the stock will trade without a due bill attached? It's the day after the record date, which in this case is Wednesday, July 31st. So stock splits are the X date for a stock split is different than the X date for cash dividends. So it's the day following the payable date for a stock split. Question 39. Which of the following retail communications must be pre-filed by a member firm in its first year of operations? You shouldn't have been struggling with this. First-year firms have to pre-file everything. So, it's 1, 2, and 3. You shouldn't be breaking a sweat on this. Question 40. A member firm receives a signed proxy from a customer who failed to indicate how his shares held in street name are to be voted at the annual shareholder meeting. The member firm must vote the shares as recommended by management of the issuer. So it's B. B. And then remember, we can't charge customers to forward the proxy material to them. We can charge, the broker-dealer can charge the issuer, but can't charge the customer. Question 41. The current inside market, I don't like we call that the inside market. It's, it's the level 2 NASDAQ data feed, or level 3 if I'm a market maker. So market maker 1 says they're willing to buy 5 round lots in inventory at 25.10 and sell 10 round lots out at 25.25. Market maker 2 says they're willing to buy 3 round lots at 25.10, sell 6 round lots at 25.25. Market maker 3 says they're willing to buy 200 shares at 25.05, 25.30, 200 on the bid, 1,000 or 10 round lots on the ask. Market maker 4 intends to enter a quote of 24.50, 25.90. What I like to do, again, I'm trying to bring this in a timely fashion, but if you give me the QID numbers, if you're watching this and you want me to explicate particular questions and give you a greater, explanation, I'm more than happy to do so. I do that on the channel. Anyways, 24.50, 25.90, and then I just like to do that with whether it's a customer limit order or a thing, just to kind of, get an idea. And there's no lock here. Lock would be the bid and the ask are the same, so that's not true. It would violate the excess spread. Well, we haven't done a trade. It's a quote. There's no trade that's been done. Market maker 4's quote. Yeah, I think it seems like they're really not sincere that they want to do something with the stock, right? So, boom. Let's see what now crossing the market would be where the bid is higher than the ask. So that's not true. So yeah, it looks like that's not related to the inside, market there, right? Whoop, I'm just trying to slow down there. 50 cents away. Is that what, 55 cents away on the bid? And what, 60 cents on the ask? Question 42. Question 42. Which of the following statements is true with regard to a branch office manager who personally services only a few accounts on behalf of his father and siblings? Supervisory requirements will be waived? No. There is no de minimis exemption available for a producing manager, even if servicing a few accounts for family members. Yeah, I think that's right. There is no, I've never heard of such a thing. There's no de minimis. De minimis is allowed for it's so small, who cares? Who cares, right? Question 43. A principal at a FINRA member firm is responsible for all the following except frequently reviewing discretionary accounts. Absolutely. Approving retail communications. Absolutely. Annual checking the character reputation of each registered rep. No. Participating in annual compliance meetings. Absolutely. So the answer is C. C. 44. In dominate and control trading market, what that means in English is there's no independent market for the security. There's not an independent competitive market for the security. And therefore, your markup will be based on contemporaneous cost. Right? That'd be the same if I'm the sole market maker, for example. So D. Question 45. If a member firm is underwriting an initial public offering for common stock EFGD Corp, a new issue that qualifies for NASDAQ, that's key, New York or NASDAQ, a prospectus must be provided to all purchasers how many days from the effective date? That's 25 days because it's listed on NASDAQ. So another aim and shoot, point and click. Question 46. To which of the following persons may a broker-dealer pay commissions under a continuing commission contract? This is testable. This is testable. To a retired employee for past business, yes. To the widow of an employee for past business, yes. To a retired who refers a neighbor, no. It's only for a book of business put on the books. So 3 is no. 4, to a retired employee in the course of his travels requires no. So it's 1 and 2. That is very testable. Question 47. An investor opened an account at your branch with a broker to whom she's engaged to be married. Big difference between being engaged and being married in terms of the regulatory framework. The broker asks you if it's permissible to lend his fiance $10,000, the firm's minimum to open an account. A branch manager may correctly respond, this loan is prohibited because all personal lending to customers by registered reps is strictly prohibited. This loan is prohibited because it's only available to married couples. That's not true. Loans of this nature may be acceptable between married couples, parents, siblings, and C, and personal family relationships. So that's the best answer given the answer set. The 24 is all about judgment questions like this one. What's the best answer? 48. Member firms are obligated to file a suspicious activity report how many days of becoming aware of suspicious transactions? That is 30 days. Question 49. Securities acquired in a standby purchase agreement must be locked up for a period of at least 3 months. Question 50. Woohoo! Extended trading hours provide investors with expanded opportunities to effectually trade. Member firms are obligated to do which of the following when enabling customers to effect trades in extended hours trading system. Right. So what I should do is provide customers with disclosures delineating the specifics. There's usually it's more thinly traded after hours, right? So we're going to provide customers in electronic or paper form a disclosure statement delineating the risk specific to extended hours trading. Question 51. Which of the following phrases best describes Rule 15.3-3? Minimum net capital requirements? No, that's 15.3-1. Customer protection? Yes, indeed. Reserves and custody of securities? Yeah, it's 2 and 3. It's called the customer protection rule, right? This is that thing where every Friday we're going to determine what customers owe the broker-dealer versus what the broker-dealer owes the customers. And then within Tuesday morning of 1 hour of the bank's opening, we're going to make that deposit in qualified securities. So that is indeed 2 and 3. 2 and 3. Question 52. A member firm is a market maker in EFGD common stock. I don't know why it keeps being EFGD. I'm going to ask the Kaplan subject matter expert on 24, Bill James. That's got to have some meaning. I don't know why he's using that as the ticker all the time. Anyways, the firm is also underwriting an issue of EFGD. I like this. So, the idea here is, can I make a recommendation? Yeah, I can if it's non-equivalent securities. Before the effective date, the member may do which of the following. So let me just see. I'm a market maker. I'm underwriting the debentures. So recommend the common stock? Yes, because that's a non-equivalent security. The convertible would be no. Accept unsolicited orders? I can always do that too, certainly. 3, solicit orders to buy? Yeah, based on the recommendation, sir. Distributes research on the common. What this is getting at is what is the straight debt and the common are non-equivalent, right? So that's what that's getting at. So it's 1, 2, 3, and 4. Question 53. Which of the following statements about real estate investments is true? If publicly owned and traded, a REIT must be registered with the SEC and therefore is eligible for SIPC coverage held in the customer's account. Well, I don't know. I like that a lot, but let's see what my other questions say. REITs are always suitable for senior citizens who are risk averse. No. REITs are organized in the same fashion as partnerships. No. REITs are different than partnerships. If it's a publicly traded REIT, it's a way to have a liquid asset allocation. If it's non-traded, not so much. But there's not a flow through of profits and losses in the REIT. So that's not true. If a REIT makes a loan for short-term development of urban real estate, it maintains ownership of the property until the loans are repaid. No, that's not true. The rest of them are nonsensical. The answer here is A. As a supervisor, you should be worried about non-trader REIT because, those are a little different and, it's heightened. Let's put it this way. Heightened suitability for non-traded REITs is what I would say. Question 54. And which of the following types of offerings does a brokerage firm have no financial obligation for unsold securities? All or none? Yeah, all or none, right? Because all or no, so I return it. There's an escrow account. If we don't fulfill it, we give everybody back their money. 2, best efforts. Yeah, best efforts. I'm going to do my best to sell the securities, but I'm not willing to buy them personally. In a standby underwriting, I'm telling the issuer that whatever rights are not exercised by their existing owners, we will take and distribute. So a standby is a type of firm commitment underwriting used in a rights offering. So it's going to be A, 1 and 2, 1 and 2. Question 55. FINRA fees paid by a member firm are based on which of the following? I would know this. It's the number of reps and the number of branch offices, 1 and 4. 1 and 4. Question 56. If a firm executes a customer order and discloses both a commission and a markup on the confirmation, which of the following is true? Wow, we have to disclose capacity, and we never can be a broker and a dealer in the same trade. I mean, how could I act as your agent or broker in negotiations with myself as a dealer principal about a markup or markdown? So we're in violation because we can't be both in the same trade. D, we can be one or the other. We're either going to choose to be, I say, listen, at Merrill Lynch, we're a broker dealer. In some transactions you do with us at Merrill Lynch, we'll be acting in our broker agency capacity and on your behalf, getting the security elsewhere, and you're going to owe us a commission. In other transactions, we're going to be acting in our dealer principal capacity, charge you a markup or markdown. You'll be buying from our inventory or selling into our inventory. And each and every transaction will disclose in what capacity the firm acted. Question 57. Which of the following are true statements? Investment bankers may supervise research analysts. Flunk the entire test. If you said that, you should, fail immediately. Your seat should shoot to the ceiling. You should definitely know there has to be separate supervision of research and banking. So you could exclude Roman numeral 1 pretty quickly. That means it's either A or B. 2, investment bankers may not supervise. There you go. So we need 2. We already knew that because we eliminated 1. Investment bankers may approve research reports. Absolutely not. It's 2 and 4. I'm dating myself, but this used to be 125 question. Join me Monday, Tuesday, test Wednesday, no pre-study, no post-study. But then we had a lot of major mess ups in the market where, bankers were telling analysts, I don't care what you think. If I say that's a $200 stock, that's a $200 stock. You need to get there. So as a result of that, we've changed the 24. It's a little more of a challenge than it used to be. During a trading halt, the investor can execute a limit order, execute a market order, close an existing position. No, you can cancel the open order, cancel the order before the place before the halt. So D. Question 59. All the following would be settled on the code of arbitration except a monetary dispute between a member and a rep, yes. A churning allegation against a requested rep arising from a FINRA firm examination. So arbitration isn't about, the member firm and FINRA. No, that's a code of procedure thing. A monetary dispute between two members, yes. A security settlement between two members, yes. So it's B. Question 60. Corporate securities distributed in a private placement under Reg D may be issued in compliance with 506B. So there's two, 506B and 506C. 506B does allow for 35 non-accredited investors. So one is true. That's not true of 506C. In the C version, they all have to be accredited. So one is true because it's B. Purchaser receives substantially the same information they will receive if securities were sold via public offering. Yes, we're going to have a private placement memorandum. It doesn't have to be as thorough. I don't know if I'd say that vetting as public. The assumption is that you're able to, as a purchaser here on your own, do more due diligence. But the answer to two is yes. There is no general promotion. That's the other distinction between the B version and the C version. With the C version, I can make a solicitation, but I can only have accredited investors. So 3 is true. So 1 and 3 are true based on it being a 506B and not a 506C. Purchasers are experienced investors and able to evaluate the risk. So what we're saying is those 35 non-accredited investors, aren't Joe Sixpack, aren't retail investors, right? So it's 1, 2, 3, and 4. Let me see what my D choice is. Yeah. Boom. Question 61. If the Uniform Practice Committee does not determine the settlement of a when-issued transaction, which of the following statements is true? So, we're trading a security on a when-issued basis. The seller may make delivery giving 1 business day notice to the buyer. So the seller can do a mark to market, basically, right? So the answer is C. Don't worry too much about the back office minutia, but, it's there. There's a couple of questions on that back office support unit stuff. Question 62. All the following must be pre-filed by a first-year member firm, except, I think this is kind of an aim and shoot point and click question, right? A, B, and C are, that's, I don't know why you'd be struggling on that. You don't do that. That's somebody else's thing, right? So we don't have to pre-file prospectuses and red herrings. No. Question 63. With regard to new issues, which of the following generally constitutes fraud? Wow. The omission of a material fact. Yes. A material fact is the kind of fact that might alter an investor's decision. So 1 is serious. 2. Forward-looking statements happen all the time. We just have to make a disclosure. The forward-looking statements are just that, and our crystal ball is correct, perhaps. Lack of sufficient disclosure in a preliminary prospectus. The inclusion of an untrue material fact. Ooh, that's the bad, right? So it's 1 and 4. 1 and 4. Question 64. Under the Code of Procedure, if a FINRA member firm receives a formal complaint for the Department of Enforcement, this is testable. The member must file an answer within how many days? That is 25 days. Question 65. Under the Code of Arbitration, all monetary awards, this is testable as well, must be paid within how many days of the decision date? That is 30 days. That's very testable as well. Question 66. A written customer complaint alleging which of the following requires members to promptly notify FINRA. Usually we do it quarterly, but if it's, time is of the essence, we're going to do it, immediately. A registered rep soliciting a likely unsuitable penny stocks? No. A registered rep executing non-authorized trade? No. An associated person taking a loan against the life insurance of a family member, endorsing the loan check. That sounds pretty, like time is of the essence, On the 24, you got to believe in human depravity and original sin, and life insurance policy, and then a loan. Sounds like where that family member is might be a risk. D, a register up failing more than once to adhere to a sales presentation script. No, C. C is where time is of the essence. 67. Sarbox, the Sarbanes-Oxley Act of 2002 deals with all the following except auditor independence. Yes. There were a lot of major financial scandals in Enron, WorldCom. I'm dating myself, but I was around before this. So that's definitely a part of it. Conflicts of interest, absolutely. Standardization of the financial reporting, no. Internal control assessment, yes. So the answer is C. Question 68. Which of the following retail communications must be filed with FINRA's advertising department within 10 business days of first use or publication? And there are certain that require 10 days prior to first use, right? And so the answer here is C. You should definitely know options are pre-filed and rankings that are not independently performed. So the answer here is C. Question 69. Under Reg D 504, safe harbor. Safe harbor means a way to do something without getting in trouble in English, or plain English versus legalese, or sales of securities. So this is not exceeding 10 million. So there's another safe harbor under Reg D. So it's not exceeding 10 million. Question 70. A financial analyst of a FINRA member firm writes a preliminary research report on a public reporting company. The supervisory analyst accepts the report, but then the analyst uncovers information that triggers a downward revision of the earnings estimate of the target company. I like this, by the way, because remember, we're not supposed to give editorial control to the issuer. We can't ask them to verify facts. The analyst resubmits the report to the supervisor. The analyst hears that the supervisor plans to release the original version with the report without providing a reasonable explanation for the omission of more current information. Ooh. The response is the analyst should. So what should the analyst do? Request that the supervisor use the revised earnings forecast and remove the analyst's name from the report. That sounds like a pretty reasonable thing to do. Notify the regulatory authorities in writing. Notify the principal operating, notify the CCO. I think the most reasonable thing here is A. And then, after that, maybe it gets escalated. Question 71. This is very testable. A financial advisor is reliably informed that Mr. Franklin Wire, a partner in Avery Wire Partners, has passed away. So what do we do when customers die? The advisor should make certain the following is done immediately with regard to the partner's account. Freeze the account following the submission of the original no. We don't wait around. Restrict the surviving party? No, we freeze the account. That's very testable. We freeze the account. Question 72. Regulations show. You should know that this has to do with short sales, right? All kinds of things about short sales, just not reporting. We report short interest monthly for the proprietary accounts of the customers. So, maybe, B would be, I guess, a good miss, perhaps. But you should have got this to a 50-50 rather quickly. Question 73. Under FINRA rules, principal transaction markups are determined by all the following except availability, yes. Thinly traded securities usually have wider spreads. The dollar value, yes. What I paid for it originally, absolutely not, right? So the cost price of securities in the dealer holds in inventory, absolutely not. Sometimes on the test, they'll have like phraseology like, I'm entitled to a profit. No, you're not. Question 74. A firm's written supervisory procedures, very testable about WSPs. Lots of questions on the WSPs of a broker-dealer. Must include provisions for supervising which of the following persons? I would think everybody, but let's see what our choices are. Associated persons working at the OSJ branch, yes. Associated persons working at non-OSJ branch, yes. Associated person working at non-branch, yes. Independent contractors working on non-branch, yes. 1, 2, 3, and 4. We ask every new hire to read that and sign it, that they read it and understood it, and we put it in their employee file. It's got to have a section on insider trading, a section on anti-money laundering, a section on cybersecurity, and then FINRA holds you accountable for not, living up to your own WSP, so to speak. Question 75. Don't overdose on net capital fiscal responsibility. One test question is you're not a financial and operations principal with year 24. And I would know the way we report this is what's called a focus report. You don't need to know that stands for fiscal operational combined uniform single report. Thank God. I would know that, fully disclosed firms do focus 2As quarterly. An established introducing firm that receives customer securities. That's important because, if you were a first year firm, it wouldn't be 15 to 1 or 1 to 15. Again, the trick is there's 2 ways to express this. As an established firm, you can have $1 net capital to support $15 in aggregate indebtedness. So that would be 1 to 15, or you can have $15 in aggregate indebtedness for every $1 net capital. So here they give us all the 50,000. And so we need to know you have to aspire and meet your highest standard. So, the 3 standards of net capital are a hard dollar amount. In this case, it's 50 because you're accepting the securities for prompt forwarding. If you weren't doing that, it would be 5, but you're doing the prompt forwarding. So it's 50, and then it's $1 net capital for every $15 in aggregate indebtedness. The last standard I would know for net capital is debt to equity, that a subordinated loan can't exceed more than 70% of your net capital for more than 90 days. But the answer here is A. Question 76. Very testable know the definition of an accredited investor. So under Reg D, all the following investors except right out of the gate, you should know A is not true. You got to have $1 million in net worth, not 750, exclusive of your primary residence. So thank you so much. Or it's an or 200 grand for the past 2 years, yes. Or married and filing jointly 300. So B is true, C is true, and D is true. So the answer is A. Question 77. Which of the following? So 147 is an interstate offering of securities. An interstate offering of securities. And one of the things about Rule 147 is we can only sell it to residents of the state. So who can qualify? It would be a resident of the state. And they can resell after 6 months, and the issuer has to have 80% of their business and assets within the state. So the answer is B. Question 78. Customer account records must be retained for not less than. That's very testable. This is a test question. It's 6 years starting when the account is closed. So that's the record retention rule. I think it kind of makes sense a little because that's, statute of limitations under arbitration. So the answer is B. Question 79. A carrying firm, after receiving account transfer instructions from the receiving member, this is very testable, must validate the positions within how many days of receipt. That is 1 day, and that is very much a test question. Question 80. With regard to private placement transaction under Reg D, which of the following statements regarding a purchaser representative is true? So this is where, we ask the person to use some third party to determine whether it would be suitable rather than us. That purchaser representative, number 1, must not be an affiliate, directed officer, or employee of the issuer, or 10% shareholder in the company. Yeah, that would defeat the point of the independent kind of relationship. However, this prohibition is lifted if the rep is related to the purchaser by blood, marriage, or adoption. That's true. The representative purchaser must be knowledgeable and experienced in financial matters and business affairs. So what we're going to basically say is to the customer, you didn't rely upon us to make this investment in the private placement. You relied upon your purchaser representative who was knowledgeable and experienced. The representative must have knowledge, must be acknowledged by the purchaser in writing as being that person's representative. True, and the representative must inform the purchaser of any affiliation with the issuer ownership relationship that may exist. That is true. Is 1, 2, 3, and 4. We are halfway through this. Woo! If you want to take pause and take a break, you can certainly do so. As you can see, the Series 24 is a slog. I've been doing this for a long time, and if I somehow disappear and you never see me again, it'll be because I did this once and then I lost the recording. I had the wrong camera set up in my studio, so hopefully we make it this time. I also am doing this because I want to give you a free look on Kaplan content. I'm a senior instructor at Kaplan. I teach the 24 a lot of times. I'm getting tired of people who don't have Kaplan content talking out of school about what I think is excellent 24 content. So that's the other reason for showing you this content. All right. Well, anyways, we're going to continue on. Question 81. It is required that the CEO certify a broker-dealer has in place detailed processes. This is testable. The testable part is she has held at least one meeting with the chief compliance officer. That's testable. And submitted the annual report to the members' firms, board of directors, and the audit committee at the earlier of the next scheduled meeting or within 45 days of execution of the certification. So the answer is A. Question 82. Question 82. Which of the following occurrences would require a member firm to make same-day telegraphic notification to the SEC and the firm's designating examining authority, and within 48 hours of the notice, what the firm has done or is doing to correct the situation? This is one of the weird ones that doesn't really fit into the others. What I mean by that is, you would think this would be a violation of net capital, but it's actually the 48 hours is the part that makes it the books and records are not current. And then, you tell them what you're trying to do to fix it. So the answer is D. Question 83. Assume that many analysts believe emerging companies and speculative stocks will soon be profitable. If a broker wants to engage its sales force in a all-out telephone campaign to elicit business for these low-price volatile stocks, well, it sounds like, that would be unethical, right? Looks like a blanket recommendation. Would not be ethical, yes. Would not be ethical. I almost didn't catch the line. I thought, what? Question 84. Again, this is testable. If an issuer wants to voluntarily delist from the New York Stock Exchange, which of the following is required? Roman numeral 1, test question, approval of the issuer's board of directors, and Roman numeral 3, the filing of the Form 25. So it is 1 and 3, D. Question 85. I would expect you to get a question on fairness opinions, maybe more than one. Under FINRA Rule 5150, which of the following statements regarding fairness opinions are true? A member issuing a fairness opinion may receive compensation contingent upon the successful completion of the transaction. That's true. So 1 is true. 2, a member issuing a fairness opinion may not receive compensation. Now, if 1 is true, then 2 is not. 3, a member issuing a fairness opinion must disclose any material relationships. That's definitely true. That existed during the past 2 years with any party of the transaction. Definitely true. A member issuing a fairness opinion must disclose any material relationships 3 years. No, it's actually 2. So it's 1 and 3. 1 and 3. Question 86. In reviewing order tickets written earlier in the day, you note that a new client is transferring his 401k assets to a former employer in Class C. Class C has a promotional expense that's ongoing. The amount being transferred is $850. So, this is a large amount, a large investment. And, there might, and are longer term oriented, it sounds like. It sounds to me like this might be a better thing, Class A with a breakpoint, it seems like. Anyways, you further note the order was marked solicited. As a compliance officer, you should, I think, ascertain whether the customer has been told about the Class A shares that have a breakpoint and do not have that forever promotional expense. So I think C is the most reasonable thing to do in this scenario. 87. With respect to using past recommendations in a research report, this is testable. So you decide you're going to tell people about your past recommendations. Which of the following statements most accurately expresses FINRA's ethical standards? And very testable, you need to disclose all the recommendations you made over the past 12 months, your winners and your losers that are similar to the category. Sometimes the way we say that is your entire universe of selections. Very much a test question. C. Disclosure must be made of all the recommendations over the past 12 months for that type or security. Question 88. Your friend is a licensed life insurance agent and wants to sell a variable annuity. You're licensed to sell insurance and securities. Your friend is not. We don't give concessions, discounts, and allowances. Don't split commissions. Well, people are not properly registered. And so the answer is D. In this scenario, both the agents have to be licensed to sell both insurance and securities and be at the same affiliated broker-dealer. Now, if you're working as a team, you don't have to disclose how you split that, but you certainly got to be properly registered. A margin disclosure document must be given to new customers at or before the account opening. At or before the account opening. Question 90. Under SEC Rule 10b-13, all the following would be prohibited from tendering shares, except you're not allowed to short into a tender. And so to accept that tender offer, you must be long the stock. And so D. I don't think it'll be as complicated as this, but you should definitely know that you can't, short into a tender offer. If you're going to use calls, you have to have already issued an exercise notice. Question 91. An establishing carrying firm has aggregate nets of 12 million. Under SEC rules, its minimum net capital is. So remember that, you got to aspire and rise and meet whatever is greater. So it's either going to be 250 grand, or it's going to be the AI to net capital, whichever is greater. So here we remember we would have to have $800,000 times 15, or 12 million divided by 15. That's greater than 250, so it's $800,000. D. Whatever, by the way, if you're doing more than one business line, you have to rise and meet the highest standard. Question 92. If a market maker elects to function as a passive market maker, so rather than withdraw, they go passive, during the restricted period, its daily net purchases are limited to what percentage of the average daily trading volume? It is 30%. Question 93. As we said earlier, one of the advantages of having a portfolio margin account is your maintenance calls don't have to be met as, promptly. They can be met within 3 business days. So the answer is A. Question 94. Changes in stock ownership by insiders must be reported to the SEC within 2 business days. That is called Form 4. Form 4. Question 95. Holders of exchange-traded ADRs accept each of the following risks. Which of these risks is least likely to be of concern? Foreign currency risk, you should definitely know it. One I always use in lectures is telephones to Mexico. They're collecting the phone bills in pesos, so you certainly have foreign currency risk. Political risk, in my telephones to Mexico, right now the presidente is a guy named AMLO, Antonio Manuel Obrador. Anyways, he's not a capitalist-friendly guy. Who knows? He might nationalize telephones to Mexico. And then you certainly have market risk. So I'm not a big fan of this question, but given that answer set, liquidity risk is least likely. Question 96. Under federal rules, if a customer buys securities in a regular way trade and pays by check on the trade date, the transaction is considered complete when it's delivered into the customer's account. So kind of an obtuse kind of a question, but it is what it is. 97. If a registered rep is hired to be a guest speaker on a non-securities related business topic, I didn't say business, non-securities, and will be paid a fee, the representative, well, that sounds like an outside business activity. So we're going to need to provide a prior written notice to the firm. Question 98. Which of the following statements regarding a member firm selling securities of an affiliated company are true? This sounds like a control relationship, right? So, there's a control relationship between Merrill Lynch and Bank of America. So a Merrill Lynch broker cannot use his discretionary authority to buy you Bank of America stock. So anyways, let's go through this one. Disclosure of the control relationship. Yep, there we go. So if you buy Bank of America from Merrill Lynch, on the confirmation, it will tell you there's a control relationship between, Bank of America and Merrill Lynch. So one is certainly true. No. By the way, you should never kind of say disclosure is not required. I mean, your default should be sunlight's the best disinfectant, right? So let's see, 3, customer permission is, there we go. I told you that's testable, right? So I call you up as a Merrill broker, say, have you been following the bromance between Brian Moynihan and our CEO, or Brian Moynihan and Berkshire Hathaway CEO, Warren Buffett? I think you should buy 1,000 shares of Bank of America. And you say, well, Dean, you have discretionary authority on my account. I don't know why you're bothering me. I said, well, I'm not allowed to use my discretionary authority when there's a control relationship. I would expect you're going to see that on your exam. Question 99. Under the de minimis exemption, an initial public offering may be sold to an account where restricted persons have a beneficial interest as long as their interest in the account does not exceed. De minimis is Latin for so small, who cares? It's 10%. I would know that. And remember, if it's not undisclosed investment entity, we have to get them to sign it. If we give it to them, there's carve-out procedures in place. I would expect a question or two about IPO allocation practices, maybe 3 or 4. Question 100. Woohoo! If a market maker does not maintain a firm quote, I can't imagine any draw of the 24 you don't get asked this question. I'm wishing for you a dream draw. Everything you shows up, everything you studied shows up. You go, what's the big deal? But if you get a face of death draw, it might be a real slog. This is definitely testable. It can be sanctioned for backing away. When a market maker fails on a firm quote, I can't imagine any exam draw you don't get asked on that. Question 101. The 5% policy, right? It's not a rule, it's a policy. So we can charge somebody more than 5%. The sale of a listed security in the third market, that's an over-the-counter transaction, absolutely. The sale of capital market stock under 144, FINRA has regulatory authority. The sale of government securities, no. I don't like this question. And C is the right answer, but what I don't like about it is the one that you're going to get asked on the test is it doesn't apply to the primary market. It doesn't apply to any offering made with a prospectus. Question 102. Which of the following statements are true regarding a temporary subordinate loan? I would definitely know this. They can only be used for firm commitment underwritings. I would definitely know that. Firms are permitted no more than 3 per year. That's true. Firms are permitted no, 1, Roman number 1. The duration is 30. No, the duration is 45. I would definitely know it's 1 and 4. I would definitely know about temporary subordinate loans. Make sure you also know they can only be used in firm commitment underwritings to restore capital, right? Because remember, when we're doing a firm commitment underwriting, whatever we don't sell goes into inventory. We're going to have to take a 30% haircut. Question 103. 103. Who sets breakpoints for mutual funds? That would be the distributor or managing underwriter, right? And, it varies from fund to fund as stipulated in the prospectus. The maximum is 8.5%. If you're going to charge that, you got to have a breakpoint, got to give them a quantity discount. Definitely know the reps should tell them about the quantity discounts and tell them about a letter of intent. Good for 13 days. It can be backdated. And then, they'll say a rep avoids a breakpoint to maximize commission. What is this? And you'd say breakpoint sale, which is a violation of the code of conduct. Question 104. If there's an acceptance, it's called acceptance, waiver, and consent. I would know this. If there's an acceptance by the offender that a rule was broken, the maximum fine for a minor rule violation is $2,500. Question 105. A representative receives emailed instructions from the trustee of a family trust to immediately wire funds to a bank the trust has never before used. The trustee's emails stress the urgency of having the funds transmitted right away, or there would be dire consequences. The rep is concerned. As branch office manager, you would advise the representative to transmits the funds. If there's 25 grand, no. Transmit the funds if they have a password to the account. A test taking trick, I would suggest you learn this information, but too long to be wrong. Let's see what C says. Verify by password and phone call placed personally to the trustee that the instructions did in fact come from the trustee and that the trust agreements permits the transmittal of funds to the bank as understood by the beneficiaries. That sounds like the right answer. Too long to be wrong. Too long to be wrong. Question 106. Which of the following statements regarding the code of arbitration is true? Simplified arbitration is for 50,000 or less. I'd certainly know that. That means 2 isn't true. The statute of limitation is 3. No, it's 6. You should definitely know. 50 grand, you should definitely know statute of limitations is 6. So it's 1 and 4. Question 107. Question 107. The disciplinary history of registered reps cannot be retrieved and can be retrieved from the SEC. No, it should go from BrokerCheck. I would also know that on the broker dealer's website, there has to be a link to BrokerCheck. So the answer is C. Question 108. If a broker dealer is owned and controlled by a publicly held corporation, I just gave you a great example, Merrill Lynch, Bank of America, and a customer wishes to buy stock in that corporation, the firm must disclose that a control relationship exists and can't be placed on a discretionary basis. That's very testable. 109, 109. A Form 8K must be filed by registered domestic issuers. I would know there's 2 circumstances in which an 8K would be filed: a material current event of a publicly held company, and we also file an 8K to cure a violation of Reg FD, selective disclosure. Question 110. I think this one's kind of a stupid. Department of Enforcement has no authority to prohibit a person from a regional change. The answer, I think that's kind of dumb. What I would know is the Department of Enforcement, remember, trade practice complaints, and it goes National Judiciary Council, SEC court. Right, I would know that. And they have no badge and no gun. 111. A issuer with assistance from its placement agent sells unregistered securities under the exemption of Reg D. If the entire issue is sold immediately, we report sales on Form D, and that must be made within how many days of the first sale? That's 15 days. I would know that. I would also know we are now required, not too recently, but we are also supposed to file a copy of the private placement memorandum with FINRA. 112. Long-term capital gains by investment companies are distributed annually. 113, a confirmation sent to a customer must include. You shouldn't have been struggling with A. You should definitely know A, right? Capacity. That's called capacity, whether we acted as an agent or principal. Certainly. Markup or markdown. If the member acted as a principal in NASDAQ security, yes. The amount of a commission, yeah. All of these. Question 114. NASDAQ is on a different, not the network A. So it's NASDAQ. I wouldn't worry too much about what happens after the trade. I'd be worried more as a supervisor about what happens in terms of before the trade, in terms of, execution and making sure there's no shenanigans there. But it's NASDAQ trades for global market stocks. 115. Under Sarbanes-Oxley, which of the following officers of a publicly traded issuer certifies the firm's periodic financial reports? That's the 310Qs and the 10K. Do not contain any material untrue statements or omissions of material facts. The chairman of the board isn't really involved day to day in the business, so it's going to be the people running the business, the CEO and the CFO. It is 2 and 3. 2 and 3. Question 116. When compared to regular margin accounts, pattern day traders are subject to which of the following? There are higher requirements to open an account. Yeah, it's 25 grand. So 1. Once we take 1, we're not taking 2. Higher maintenance margin. No, the same maintenance margin. They actually get a better deal on excess, but it's 1 and 4. And remember, we have to disclose to them that day trading is hazardous to their financial well-being. Question 117. All the following are accepted methods of meeting a Reg T margin call except depositing securities with loan value equal to the amount of the call, which would be 2 times the margin call. Yes, A. Requesting an extension does not meet the Reg T call. It just gives you more time, but that doesn't meet it. Selling another stock on the day of purchase. Yeah, that's called the same day substitution. Depositing cash equal. That's the number 1 way to do it. And so, no, the extension does not actually meet the margin call. Now, be careful. The margin call, remember, is the call for initial money. The maintenance call is an entirely different thing. Question 118. Under SEC Rule 17F2, an associate person is exempt from the fingerprinting requirement if they submit ineligible fingerprint cards on at least how many occasions? That's 3. Very rarely. There are some fingerprint people with fingers that just, don't cooperate. Question 119. Suspicious activity reports must be filed with. You should definitely have a general understanding of anti-money laundering. And so there's going to be FinCEN, and we do that within 30 days. This is where you should understand red flags, commercial illogical, origin source of funds would be red flags. They're not worried about the economic consequences of their trading. I would also know that within the WSP, there's got to be a section on anti-money laundering. I would know we have to appoint an AML officer. That person doesn't need to be registered, surprisingly enough. And we have to conduct an AML test by third party annually. So you could expect a couple questions on anti-money laundering. Question 120. When a member firm registers as an alternative display facility market maker, Additional making requests are effective the same day. The same day. Question 121. Under Rule 5121, to be qualified to set the offering price, an independent underwriter must. So, when Goldman Sachs goes public, I mean, what do you think Goldman Sachs is worth? So they're going to have to use a qualified independent underwriter. In their case, they use Lazard. And then when Lazard went public, they used Goldman. But it has to be an independent underwriter. So that alone is a test question. They don't have conflict of interest. So the answer here is B. And then for a follow-on, you don't have to have an independent qualified underwriter because there's already a price there. So that is certainly testable. Question 122. A couple is looking to open a joint special margin account and refuses to disclose any information about the accounts held at another broker-dealer. What do you do? Well, you may open the account, but only with full disclosure. You may open the account solely for the purchase of mutual funds. That would make no sense. Without full disclosure, you can't open the account. You can actually open the account. You're just going to have to create, and document that. So the answer is D. You can open the account. Yeah, kind of an odd one. 123. If a representative reasons that a listed technology stock is undervalued and solicits all customers to purchase the stock, well, in most circumstances, the customers are going to be unique in terms of their situation. So in most situations, we don't make blanket recommendations. I say, listen, after the seminar, why don't you make an appointment and we'll see what your unique situation is. And so, yeah, this sounds like a blanket recommendation, A. Question 124. An investment advisor is placing orders for several clients to purchase the shares of the Gamma Fund. The fund has breakpoints of 50,000, 75,000, 100,000. The total amount to be purchased for all clients is 250 grand. Which of the following is true regarding the sales charge? I don't see anything that this is a husband and wife and the kid. It seems like these are three separate customers. And, they can't pool their purchases for purposes of meeting a breakpoint. So I think we're going to say that each client is going to be charged based on their, whatever they're investing. So the answer is B. 125. With a compelling reason, the bulk transfer of variable annuities may be accomplished by the use of, a negative response letter means, no news is good news, or we can go move forward. And so the answer is D, a negative response letter, right? We could have done this by process of elimination as well. Question 126. As I told you, Oates is no longer around, but the replacement is very similar. And so we transmitted the reports daily. Question 127. The record-keeping reporting requirements of the Bank Secrecy Act. That's what gives us, freedom. I don't know if freedom's the right word, but us not being liable for giving FinCEN information. Anyways, it's an attempt to do which of the following? Serve as a tool in foreign policy tracking and reporting? No. Overcome foreign bankruptcy secrecy laws? Yes. Deter money laundering? Yes, 2 and 3. The financial thing is a different thing. That's about OFAC, so it's 2 and 3. 128. 128. Under FINRA rules, a member firm may contact which of the following persons, each of whom is on the do not call registry. The person making the call has a personal relationship with the recipient. That sounds fine. The person has contacted the member to inquire. If they made an inquiry within 3 months, we can follow up. The person we contact transferred his account within 18 months preceding the call. Indeed. The member has obtained the person's prior written consent. Indeed, 1, 2, 3, and 4. 129, an established member firm is an early warning when AI to net capital exceeds, I'm just checking to make sure, 12-1. A registered rep with discretionary authority needs customer consent before purchasing. We talked about this, a listed stock where there's a control relationship, Bank of America and Merrill Lynch. 131, which of the following statements are true regarding representation letters where require under 5130? Initial verification in the form of a positive affirmation letter. Indeed. So, this is where you assure me that you're going to follow the procedures. You're not going to put the stock in account doesn't belong in. Annual verification can be negative consent. Indeed. So it's 1 and 4. I would know that. 1 and 4. This is this idea of IPO allocation to an undisclosed investment entity. Question 132. Alpha Securities, a member firm based in the U.S., has a correspondent relationship with Delta Securities, a non-U.S. based broker-dealer. Which statements regarding the activities of Delta Securities in the U.S. is true? If Delta visits its clients in the U.S., it must be accompanied by Alpha. No. Delta can enter buy and sells directly orders. No. Delta, remember, Securities is the non-U.S. broker-dealer, and they can issue a report in the U.S. under the name of Alpha. I wouldn't worry about this question, but it's D. A market maker must act in an agency capacity when WXYZ to which of the following accounts? That would be wrap accounts. C, wrap accounts. Page 1, or question 134. An investment banking firm, totally large retailing company looking to raise money through an IPO that could rely upon the support and agreement on valuation by the entire firm, including the bank analyst. Remember, the analyst is supposed to be able to act independently. Which of the following would be deemed a true statement? Information barriers are not required. They are. We're looking for something true. That is false. Analyst job security and annual employment review may be subject to the number and size. No, very testable. Compensation can't be tied to investment banking. C, investment banking firms must rely upon third parties for analysis evaluation. No. The bank's compliance department should look for failures to supervise for those persons who disregard information barriers between divisions like banking and research. D is in dog. 135. Which of the following are signs a customer may be engaged in money laundering? Excessive journaling entries between related accounts. No. Yeah, unrelated accounts. I mean, what's up with that, right? Why is there, lack of concern of risk commissions or other transaction costs? That's definitely something. The way we say that is commercially illogical. So 2 and 3. I would be prepared for that. I have a separate little anti-money laundering lecture on the channel. I highly recommend it. No surprise. Question 136. Compared to normal hours for the New York Stock Exchange, the consolidated tape opens before and closes after. Opens before and closes after. B. 137. Before placing a stabilizing bid. Stabilizing bids are very testable. As I mentioned, I hope you have like a stack of 4x6 cards or a notepad next to you when doing these explications, because some of them are things you need to know, like this one. So advise NASDAQ as to whether the syndicate will engage in any short covering. Yes. Do all of these. I don't know why to do all of these is buried in the thing. So that means we got to read the rest. Notify NASDAQ as to whether the bid will be a penalty bid or penalty free. Yes. Provide NASDAQ with a copy of the cover page of the prospectus. Yeah, you have to do all of those. Remember, only one syndicate member can enter the stabilizing bid. It has to be at or below the public offering price. It has to be in the prospectus. Better to have it in the prospectus and not need it than need it and not have it. So very testable, very testable. 138. A principal is required to approve discretionary order tickets promptly after execution. 139. An associated person of a FINRA member firm has purchased tickets to take a customer to a sporting event. At the last minute, the representative experienced a family emergency, a sick child. Which of the following statements is true regarding this situation? Well, one of the things that makes the 24 challenging is there's a lot of judgment questions. A lot of judgment questions. The associated person must provide a doctor's note to evidence that the emergency was genuine. No. The customer may use the gifted tickets and attend without being accompanied by an authorized person of the member firm. Yeah, I mean, this is one of those life things that happens. So B, the customers pay for the tickets. No. The customer cannot use. No, why compound that? So, we definitely are going to say B. It's an exception, right? Because what in the scenario, the context is exceptional. 140. A testimonial published by a member firm regarding the high quality of its investment advice must conform to each of the following practice, except no more than $100 may be paid for the testimonial. Oh, that's the except. C. 141. An employee of a full-service broker-dealer would like to open an account with another financial services firm. All the following statements are true except. Very testable. The employer must approve each transaction before entry of the order. No, if that was true, we would have said something. Let's look at the other side. The employer requests them, it must obtain. That's very testable. Duplicate statements, very testable, very true. The employer must be notified in writing of the opening account. Very true, very testable. The employer must grant written approval to open the account. Very true and very testable. So the answer is A. 142. A man unknown to the firm enters an OSJ seeking to open an account with $8,000 initial cash deposit. During the onboarding process, the representative learns that the customer desires to be anonymous due to political upheaval in his native land and that lives would be endangered should his cash deposit be made known. What prudent course of action could the firm reasonably take as part of its due diligence process? Well, I think we definitely want to check with the Office of Foreign Asset Control. So, but let's see, it's part of its due diligence. Fire CTR, no, CTR 8 is in 10. Open the account, perform a search, and file a suspicious activity report. I like that one. Decline the opening account from any foreign national. I would stuck between B and D. I'm going to go with B. We're going to open the account, but we're going to, do a search, to see what's going on. 314A search is biweekly to FinCEN, and that would tell us, if there's anything, in the system, so to speak. 143. A FINRA member firm decides to become a registered market maker in an ICBS stock on NASDAQ. In entering the firm's market quote on ICBS stock, which of the following rules apply? The bid price entered must be lower than every other market maker's current asset price. Boy, the grammar here is atrocious, but that is true because otherwise there would be a lock. Again, you might want to consider making an exhibit, but if I put in a bid at some other market maker's ask, I'm going to either lock or cross the market. So one is true. The bid price entered must be higher than every other current ask. No. The bid price entered must be lower than every other market maker's current bid. No. The ask price must be higher than every other market maker's bid. Yeah, I don't like the grammar here, but what this is saying in English is you can't put in a quote that would lock across the market. And 1 in 4 of the scenarios where that actually may happen. So, I think you're going to be asked to do that with the actual numbers in an exhibit than you are being asked to do it here. 144. I wouldn't worry that the answer here is 700 million in common equity B. What I would know is that if it is a WIXI, their shelf registrations are good for 3 years and they're immediately effective, which is different than if you weren't a WIXI. So the answer is B. 145, records relating to a terminated registered rep. The vast majority of brokerage firm records, including this, are 3 years. There are very few records that are lifetime in 6. Complaints are 4. But, what I would suggest is learn lifetime 6. Everything else is 3. Question 146. Settlement on, when, as, and if issued, and when, as, and if distributed are usually determined by FINRA's Uniform Practice Committee. 147, which of the following statements are accurate interpretations of FINRA rules regarding or governing communications with the public? 1, copies of all communications must be kept on file for 3 years. We said the vast majority of brokerage firms are 3 years. Retail communications, that would be for more than 25 retail clients or prospects in a 30-day period, must carry written approval of a principal. That is indeed true. 1 and 2 is true. Retail communication with the public, regardless of the type, must be submitted to FINRA within 10 days of use. That is not true. 4, sales and product promotion must be considered retail and submitted to FINRA. No, it's 1. It is 1 and 2. Uh, 148, on the following statements, which of the following statements regarding transfer of accounts? This is very true, or very, very true, very testable about transferring accounts. Which of the following statements regarding transfer customer accounts are true? Upon receipt of transfer instruction, the carrying firm has 1 business day to validate. That's very testable and is true. Upon receipt of transfer, the carrying firm has 3 business days to validate, including all bond letters. I have no idea why that's even in there. Upon validation, the carrying firm must effect the transfer. There we go. This is very testable. 1 and 3. Very testable. Upon validation, 3 business days to do the transfer. 149. The SIPC sign must be displayed in which of the following? The OSJ, yes. Supervising branch offices, yes. Non-supervising branches offices, 1, 2, and 3. Question 150, a member firm must establish, maintain, and enforce written policies and procedures reasonably designed to identify and effectively manage conflicts of interest related to the preparation, content, and distribution of research reports, which include periods during which the member must not publish or otherwise distribute research reports, and research analysts must not make public appearances related to the issuer. Woohoo! I'm hoping you're operating from abundance and, maybe you can just guess B on this question and assign it to the universe. This is a minimum of a minimum of 10 days following the date of the initial public offering if you participated as underwriter, 3 days for the follow-on. So the answer is C, as in Charlie. 151. When an issuer is purchasing its own securities, I would expect to see something on this. 10b-18 requires the price paid be no more than greater than the highest current bid. We're not supposed to peg it or make it look like it's active. So the answer is D, as in dog. Question 152, which of the following statements regarding SMA balances are true? I wouldn't worry too much about margin on your 24. Make sure you know the documentation. Make sure you know debit by 0.75 is market value maintenance. Make sure you know credit by 1.3 is market value maintenance short. Make sure you know 25% and 30%, but to try not to get too much in the weeds on margin. SMA balances may only be used to purchase additional securities. That is not true. Your SMA can be used as cash. So not true. We're being asked what is true. SMA balances may be withdrawn without restriction. That is not true. Right? You can't, put yourself into maintenance, for example. SMA balances may be withdrawn provided they do not bring the account below minimum. There we go. Ding, 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 ding. They're free credit balances? No, they're not. It's a credit. If anybody thinks that, they're really confused. It is C. Question 153. Under state law, an offer of rescission made by a broker-dealer to a customer may be accepted or rejected by the customer. How many days? That is 30 days. The SEC is God and state administrators think they are. The Uniform Securities Act, if we haven't properly blue skied, that means, registered with the state, we might have to offer a right of rescission. Question 154. Which of the following are discretionary orders? So we're looking for the 3 A's. If one of the 3 A's is missing, it is a discretionary order. So the 3 A's are action, asset, and amount. So if the 3 A's are present, it is not a discretionary order. I'm being asked what is. A customer sends 25 grand and tells me to purchase bank and insurance company stocks, whenever the price looks favorable. So I have a buy, but I don't have the security. That's discretionary. 2, a customer has an agent buy. There's the action. 1,000 shares, the amount. ABC, there's the asset. The 3 A's are present. That is not a discretionary order. 3, a customer instructs an agent to purchase as many shares of XYZ as he thinks appropriate. Well, that's the amount. That is a discretionary order. If any of the 3 A's are missing, it's discretionary. So 1 and 3. 4, sell, there's the action. 300 shares, there's the amount. LMN, there's the asset. And so the answer is 1 and 3. 155. Under NASDAQ trading rules, the maximum order size is. It is less than $1 million. Choice A. 156. A representative approaches the branch office manager and explains that one of the firm's largest customers has placed an order for shares of common stock that appear on the firm's do not buy list. The branch office manager would most likely tell the representative, yeah, A, I mean, come on. If there was something like A, you would have heard it, right? No, B, I mean, A and B, I think are just poor distractors. There's nothing like that at all. So I just toss them out because I go, man, I think I would have seen that in the LEM somewhere or some practice question. No, 1,000 shares. Given that answer set, we are like a restaurant, we can refuse service. So the answer is D. I mean, the point here, it's on our do not buy list, and do not buy list means do not buy. 157, a registered rep of a small branch has finished filling out the new account form, is looking to have them approved as soon as possible. So the customer may start doing business in listed options and municipal securities. Approval by the accounts may be made by the branch office manager or person in charge. 158, which of the following are true regarding a short position in a national market system stock? The borrower's account will be credited. No, if you have borrowed the security and it pays a dividend, you're not going to get the dividend. In fact, you're going to get debited for it. You're going to have to pay the lender. And so 2 is true. The lender is going to get the credit. They're going to get the dividend. So it's 2 and 3. 2 and 3. 159. The Investment Company Act of 1940, which of the following investment company activities are restricted? I always joke if my baby broker came in and said, you know, he has a 7, but can he just sell mutual funds? I'd say, oh, that would be wonderful, right? So supervising mutual funds is not usually a big deal on the 24. In fact, I usually start class by saying, you know, the people that are at risk are, you know, mutual fund folks that, you know, trading and the banking can be something I haven't done in a long time. Buying and carrying securities on margin, they're not supposed to be doing that. 2, concentrating in the investments, or I think, well, they're supposed to be properly diversified, but there's no rules against that under the Investment Company Act of 1940. And they can't sell short because we just said they're not supposed to be using leverage. So it's 1 and 3. Woohoo, our last one. Woohoo. Which are the following differences? So 1, the Code of Procedure deals with violation of the conduct rules, whereas arbitration is used to settle civil disputes. That is indeed true. Mediation is not required with the Code of Procedures, but it's mandatory with arbitration. No, usually mediation is based on the state. There are some states that require mediation before arbitration. 2 is not true. Code of Procedure decisions may be appealed. That is true. Whereas decisions under arbitration are, it may not. Yeah, arbitration is final and binding. So that is true. So 1 and 3 and 2. Arbitration for violations are more serious? No. So it is 1 and 3. All right, well, you know, I'm a senior instructor of Kaplan, and so I probably did pretty well because I teach the 24. I'm going to put a link in there. Let's see how I did. Maybe I missed something. Let's see. You know, I teach the class, so I'm familiar with this QBank. So I don't think let's see, did I miss anything? Now, remember, if you'd like a more of an explanation on any of these, just give me the QID number, and I am more than happy to go over that with you. And it looks like, let's see, ooh, looks like we got them all right. So cool. I'm going to put this in the playlist in the Series 24 list, also in the video description. I'm not going to timestamp it right away. I've been putting this off because you can see it's just a slog. But I am going to put it in there, and I'll eventually timestamp it. But in the meantime, I will put a link to the Kaplan where you can get the 24 QBank and the discount code for that. Remember, inch by inch, your 24 is a cinch. Yard by yard, your 24 is hard. Hope you find this worthwhile. It'll probably be a while before I put up another practice final for the 24. But I will do other things. I do little carve-outs and things like that, some other practice questions. I have on the horizon some additional practice questions. All right, well, I'll see you next time. Bye-bye.